Welcome to another episode of Markets Dawn Europe, an audio podcast on financial markets for European-based professionals. A minimalistic solution to the information overload in mainstream and social media. This is what you need to know today.
Morning. Welcome to the busiest week in global markets this year, with tomorrow's US national election and several central bank policy meetings. The latest polls anticipate a tight election, as candidates attend their last rallies across swing states. 32% of eligible Americans have already cast their vote. The dollar is falling today following a poll that showed Harris winning in Iowa, in a reversal to one of the Trump trades that saw a recent recovery for the greenback. The dollar index is at 103.70 this morning. Asian equities are mostly higher today, with Korea and Taiwan adding 1%, while India is dropping by the same amount. Last week ended with the lowest non-farm payrolls figure since late 2020, with the US economy creating just 12,000 jobs in October, compared to the 113,000 expected, and 223,000 in September. Private payrolls also came in well below estimates, with 28,000 job losses. The unemployment rate remained steady at 4.1%. The drivers of the week report were Hurricanes Helen and Milton, and strikes, but helped Trump on the last day ahead of tomorrow's election. Wall Street stocks finished firmer on Friday, following a solid day for European markets which gained more than 1% on the back of a strong performance for financials. Friday's partial recovery for risk assets was not enough to avoid a negative week-to-date performance, as leading indices lost around 1.5%. Benchmark bond yields ended sharply higher for a second straight week, with 10-year gilts as the notable movers, with a 21 basis point jump week to date to 4.45%. Treasuries closed 8 basis higher on Friday at 4.36%, and bonds added 12 on the week to 2.41. Markets are pricing in an almost certain 25 basis point rate cut by the Fed and the Bank of England at this week's meetings, despite the recent bond sell-off and traders' shift in interest rate expectations. On the earnings front, oil giants ExxonMobil and Chevron beat revenues and profit estimates on record oil output, but profits fell year-on-year on smaller refining margins. Exxon shares fell 4% last week, but remain 15% higher this year. Berkshire Hathaway continues to reduce its holdings in Apple, taking its cash holding to a record $325 billion. Berkshire shares are 27% higher in 2024. On Sunday, OPEC Plus agreed to delay the previously announced December oil output hike by 1 month, mostly on the back of weak demand in China and non-cartel production keeping prices down. After dropping 3% last week, Brent is recovering 1.6% today, at $74.25. In other data on Friday, Swiss headline inflation eased to spot 6%, below estimates, and the lowest reading since April 2021. Two-year Swiss bond yields fell 8 basis on Friday, to spot 32%, and the Swiss franc depreciated spot 7% against the dollar. In sovereign credit ratings, Turkey and Egypt were upgraded 1 notch, to BB- and single B. It will be a busy week for global monetary policy, with rate decisions by the Fed, Bank of England, Reserve Bank of Australia, Norges, Riksbank, and the Central Bank of Brazil. Also, China's National People's Congress Committee meets every day of the week, with markets expecting details on the recent stimulus announcements. Data to be released today: manufacturing PMIs in the Eurozone, Germany, France, Spain and Italy. Also, US factory orders. Today's earnings reports include Ryanair, NXP Semiconductors, and Vedanta. It's a holiday in Japan, Russia, and Colombia. Thanks for your time. See you tomorrow.
Visit laconicbriefs.com to subscribe to our newsletter, including this audio podcast with an extended script if you prefer to read, plus performance tables and charts, all in one place. Delivered straight to your inbox every morning, Monday to Friday.